On the other hand, you need to start presenting a consolidated financial statement which has to be approved. An entity that is a parent shall represent consolidated financial statement. Suppose it is a wholly owned subsidiary, which means to say that it is completely entitled under it. They want to see that every rupee that is being invested into the company starts growing using uniform accounting policies for like transactions. Good morning and welcome to the session 2 in unit 5 of IFRS, where we are going to speak about the consolidation and disclosure. Now this is a very important factor that we are talking about in IFRS. Now the objective of this standard is to establish principles for the presentation and preparation of consolidation financial statements where an entity controls more than one or other organization. Now normally when you start looking into organizations like the Tata Group, the Reliance, the Aditya Birla Group, the Godrej, these kind of companies have got lot of companies. They have a lot of joint ventures. They have a lot of allied segments that they are working with. So in that case, what happens is that you will not be able to present individual accounting. On the other hand, you need to start presenting a consolidated financial statement which has to be approved. So what these groups will tend to do is that they will tend to prepare a consolidated statement which is going to talk about the group entity as a whole. They are going to show the entire consolidated position of how the group has performed over a period of time, what are the different factors, what are the different acquisitions, different alignments and the strata that they have made all together. So all these things will be included in their factor. So that is why I would say that the objective of this standard is primarily to make the investors and the public appreciate about the factor that the consolidated statement that is going to be presented to them, followed by an entity that is a parent shall represent consolidated financial statement. This standard applies to all entities except a parent need not present consolidated financial statements if it meets all the following conditions. Now we are going to see what are the following conditions here. Now the first thing is it is wholly owned subsidiary or partially owned subsidiary in the entity and the other owners, including not otherwise entitled to vote, have been informed about it, do not object for it, and the parent not presenting the consolidated financial statement. So where is the scope coming in is that suppose it is a wholly owned subsidiary, which means to say that it is completely entitled under itself. It has its own branch, it has its own accounting, it has its own setup by itself, or it is partially owned by another subsidiary. Now this is where I am trying to bring in the concept of JV, known as the joint venture, that comes into picture. Why? Because in that case, suppose it is partially owned. I am owning partially an R&D unit altogether of an organization and it's all other owners, including otherwise, which is not entitled. Otherwise I have told. Now suppose it is specifically mentioned at that given point of time that this entity does not have to go ahead and present the kind of data that is mandatory or that is needed altogether, then we will not be doing that. And the second part here is that they do not object to the parent not presenting the consolidation financial statement. So that itself becomes a very important factor. Now the parent company itself agrees and says that okay, we are not in a position to present that consolidated statement. We are not in a way that we can go forward and present it all together. Then it is an accepted factor. Then at that point of time, you don't have to come into consolidation. The second thing here is that it's debt or equity instruments are not traded in public market. No, I'm not a publicly traded company. I'm just a private limited company. I'm not being listed in NSE or BSE or any other stock exchange market for that matter. So in that case, again, I don't have to go in for this consolidated financial statements. Secondly, I'm either in the domestic or foreign market over the counter, including the local exchange or regional markets. Now, why this specification of markets is coming into picture is very, very important for each one of us to understand and take it forward. Now, for me, what I would typically like to talk about or typically like to intend to say here is that in many a times what happens is people start understanding the concept of a financial scope or a financial presentation more from the exchange standpoint of view rather than just the financial position of the company. When I use that word exchange standpoint, I mean to say the investor. Because these days what happens is that more than the owners of the company, the investors are interested in seeing the growth of the company. They want to see that every rupee that is being invested into the company starts growing. So that means whichever entity or whichever asset the company is acquiring in the long run, that particular entity or the asset needs to be managed in the way it has to be looked forward. So in that sense, I would always say that it is the mandatory responsibility of the organization to look into it and then guide it forward. So that's where I would say that this is one of the most important factor that I can ever talk about. This is one of the most important situation rather I would like to talk about. So that is why, whenever we are looking into it, whenever we are seeing that there are some guidance that is being needed, this consolidated financial statement is a very, very attractive tool altogether, which is going to attract the investors. It's going to give a complete picture about the organization, and it is going to say this is what we have done in the last so many years and this is what we have acquired in the last so many years. So this statement will be giving you the current position of what we have been doing in the last 1 year. So very, very important here is the consolidation and the disclosure of that statements. Followed by, suppose it also, the third condition which I want to say, it did not file or is in the process of filing its financial statements with a security commission or a regulatory organization for the purpose of issuing any class instruments in the market. Now this is another and a very interesting factor to see. Now over the period of time, most of the private companies start getting that feeling or the factor that I should start becoming a public limited company. I should go to the market and get money from the investor. Now, the moment I think about an IPO, it is not that easy. Why? Because it does not involve just about filing an IPO, but it involves a lot of strong thought process where you have to go to the market, where you have to convince the people, and then you should be having a strong financial position. Now, in that case, suppose I'm going to the SEBI and I want to list myself in the market. During that time, I don't have to worry for this consolidated disclosure, because first let me go through the process of filing the IPO. Let me finish up with that process. Then I will go with the consolidation and the disclosure that is being mentioned there. So that is why I would always say that this is something very, very interesting for each one of us to know in terms of the statements of financials. Now, the next thing is that its ultimate or any intermediate parent produce any financial statements that are available for the public use, and they comply with the Indian accounting standard in which the subsidiaries are consolidated, measured at the fair value through profit according to it. Now, the other part where I might not go in for the consolidation, where I might not go in for a disclosure, is that suppose its ultimate, that is the governing head, the corporate head, the parent body of the organization, organization or an intermediate body has already presented a consolidated financial statement which is available for the investors and that is matching according to the Indian accounting standards, then I don't have to represent this value again. Now, while they are presenting that consolidated financial statements, they would also look into the fair value accordance and then they would go with the Indian accounting standards there. So that is why this becomes very, very important for all of us to understand how it works in terms of the matching of philosophy. So that's why I would say that this consolidation is definitely needed, which will help us in terms of forming up the loss, in terms of forming up the situation altogether. Now let's look at the definition here. An investor, regardless to the nature of its investment with an entity, now this is very, very important, shall determine whether it is a parent by assessing whether it controls the investee. So that is also very, very important here because he is going to assess the value of that factor. The investor control of investee when it is exposed. Now that word is very, very important. When it is exposed, or it has rights to the variable returns from its involvement with an investee and has the ability to affect those returns through the power over that investee. Now this is very, very important. Why? Because we say about an investor who is regardless of the nature of involvement with the entity. So whatever happens, I am not bothered about it because I am not really concerned with the entity. I am an investor. I am just looking into that company from an investment perspective. That shall determine whether its parent has the assessment over on the investee. That means whatever the parent has got the control factors on the JV part, on the companies or on the subsidiaries, that has been already taken into account. So that is where this is becoming even more important. Investor control on investee, when it has been exposed, it has been told that this is the rights, this is the involvement, this is how I have purchased the company, this is where I have put my money, why I have put it for an R&D purpose or for a growth purpose, for a development purpose, I am parking my funds here, or for a future enlargement purpose. All together will be clearly disclosed through this particular standard. Once this thing is being disclosed, it has been told to the public or to the investors there, then they will be able to get a clear picture of what is happening in the markets. Next, the financial statements of a group. When I talk about this word of a group, in which assets, liabilities, equity, income, expenses, cash flows of the parent group, that's very, very important, and its subsidiaries are presented as a single economic entity. Very, very important and an interesting factor to note here. Financial statements of a group in which asset, liability, equity, income, expenses, cash flow, all these things will be shown as a single economic entity. The Tata Sons, Aditya Birla Group, the Reliance Industries Limited. So when I'm putting a consolidated financial statement which includes all my 100 or 150 industries, how they have performed, what is the segment wise performance, what is the parent head, and how much is my revenue, what is my consolidated expenses, consolidated growth, all together is going to be disclosed through this particular standard. Now, the accounting requirements for this is that a parent shall prepare consolidated financial statements using uniform accounting policies for like transactions and other events in similar circumstances. Now, the consolidation of an investee shall begin from the date of the investor he obtains control of the investee. In C, suppose the investor loses that control of the investee. Now what happens here is that the parent shall prepare the consolidated financial statements, very, very important, using the uniform accounting philosophy principles for like transaction. For whatever transactions that has been done across, this has to be used under the similar factor or standards. So we are not going to disturb the methodology or the standard here. We are going to follow the same pattern. So in terms, consolidation of investee shall begin from the date when the investor obtains control. So from the date when the company, the parent company acquires the child, acquires the subsidy, from that date onwards, we need to start recording all the financial transactions that has gone through. So that is why this standard is very, very important. With this, I come to the end of this session. I hope and believe that this session was of a great importance and value to you. In the upcoming sessions, we will be learning more about the accounting standards and what is the impact of it in the modern corporate world. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.